The Seagram disaster. When money, power, and history sit at the same table, the world changes. Now imagine what I'm about to tell you. You inherit one of the most profitable businesses in North America. A spirits empire built over 3 generations, worth nearly $7 billion. Now, imagine destroying almost all of it in just 2 years. Not because of bad luck. Not because of a market crash, but because of a series of catastrophically bad decisions, so bad that even your own father calls it poor judgment while watching the family fortune evaporate. This is the story of Edgar Bronfman Jr., the heir who had everything, and the French executive, Jean-Marie Messier, a vision that would become one of the greatest corporate disasters in history. When the dust settled, the Bronfman family fortune had fallen from $6.9 billion to under $1 billion. $6 billion gone. In this video, we'll see how a legendary family business was dismantled, how ego and ambition blinded 2 powerful men, and the warning signs every investor and business owner must learn to recognize. And before we dive in, if you're interested in the hidden economic events that shape our world, don't forget to like the video and subscribe to the channel. Chapter 1. The Heir and the Golden Cage. To understand how Edgar Bronfman Jr. destroyed the family fortune, you first need to understand what he inherited and why it wasn't enough for him. When we hear Bronfman, we imagine an American dynasty. But this story begins in Canada. Samuel Bronfman, Edgar Jr.'s grandfather, arrived in Canada as a poor Jewish immigrant from Russia. In 1924, he founded a small distillery. Then came Prohibition in the United States. Americans couldn't legally buy alcohol. Canadians could still produce it. For Samuel, Prohibition became a golden ticket. Over the years, he built Seagram into one of the world's largest spirits companies, producing brands like Chivas Regal, Crown Royal, and Absolute Vodka. By the 1970s, Seagram was printing money. Then the family made another brilliant move. They invested heavily in DuPont, a massive chemical company. By 1995, Seagram owned 24% of DuPont, a stake worth roughly $9 billion. It generated steady dividends. It was boring. It was stable. And it was incredibly profitable. Edgar Jr. grew up surrounded by unimaginable wealth. But unlike his grandfather, who built an empire from nothing, Edgar Jr. was born a prince. Elite schools, Hollywood circles, famous friends. And here's the key detail. He didn't want to be in spirits. He didn't want chemicals. He wanted entertainment. In 1994, Edgar Jr. became CEO of Seagram. His father, Edgar Sr., remained chairman. The young heir had big ideas. He looked at the DuPont stake differently than his grandfather. Where Samuel saw stability, Edgar Jr. saw stagnation. Where others saw guaranteed profit, he saw wasted potential. He believed that instead of sitting inside a chemical company, that money should be building movies, creating music stars, and constructing a media empire. Wall Street analysts, however, considered the DuPont investment genius, the definition of smart, conservative wealth management. But Edgar Jr. didn't want to manage his grandfather's empire. He wanted to build his own. That ambition, and the desire to escape his grandfather's shadow, would soon push one of North America's greatest family fortunes toward destruction. The first domino fell in 1995. Chapter 2. The Turn Toward Hollywood. April 9, 1995. Edgar Bronfman Jr. announced a deal that shocked the business world. Seagram would sell most of its DuPont stake. The money would be used to buy MCA/Universal, one of Hollywood's legendary studios, for $5.7 billion. Let's analyze that decision. Edgar Jr. traded a 24% stake in DuPont, a predictable, dividend-paying Fortune 500 chemical giant, for a movie and music studio in one of the most volatile industries on Earth. Entertainment is hit-driven. One bad summer can wipe out a studio's yearly profits. One failed music contract can cost hundreds of millions. No steady dividends, only box office and hype. His father publicly supported the decision, but inside the family, doubts grew. His uncle Charles Bronfman, who controlled a large part of the family wealth, was deeply skeptical. This was not the Bronfman style of investing. Their tradition was conservative, stable, and profitable. But Edgar Jr. believed he could win in Hollywood. He renamed the company Universal Studios, invested in music labels, and chased talent. For a while, it seemed to work. Universal had some hits. The stock price stayed afloat. But beneath the surface, trouble was brewing. Running a spirits company is simple. The product never changes. Crown Royal tastes the same today as it did 10 years ago. Entertainment is different. You must chase trends, compete for talent on the next big thing. By 1999, Edgar Jr. felt the pressure. Universal wasn't failing, but it wasn't the empire he dreamed of. He needed scale, more content, more distribution. So he searched for a partner. And that's when he met Jean-Marie Messier. Messier was CEO of Vivendi, originally a French water utility. Yes, a water company. But Messier had enormous ambitions. He wanted telecoms, TV networks, internet companies, everything. He rebranded the company as Vivendi Universal and presented himself as the architect of a global media empire. The French press nicknamed him J6M, Jean-Marie Messier. Moi-même, maître du monde. Jean-Marie Messier, myself, master of the world. This was the man Edgar Jr. was about to trust with his family's fortune. Two men met. They spoke of vision, of synergy, of building something unprecedented. And in those meetings, Edgar Bronfman Jr. made the decision that would destroy everything his grandfather built. Chapter 3. The Fatal Handshake. June 20th, 2000. The announcement hit like lightning. Seagram and Vivendi would merge, creating a $34 billion media giant, Vivendi Universal. Edgar Bronfman Jr. became vice chairman. Jean-Marie Messier became CEO. But here was the fatal detail. The Bronfman family didn't receive cash. They received Vivendi stock. Why does this matter? If you sell a company for cash, the deal ends. The money is yours. You can diversify. You control your future. But if you accept stock, your wealth depends entirely on the buyer's performance. The Bronfmans handed over a $6.5 billion family legacy entirely into Messier's hands. At the time, Vivendi stock traded around $77. The family expected it to stay there or rise. Their share was worth roughly $6.9 billion. But warning signs appeared immediately. Even before the deal closed, Vivendi's stock began falling. Investors grew nervous. The company was taking on massive debt. Messier continued buying more companies, USA networks, internet assets, spending as if money were infinite. By December 2000, when the merger officially closed, the stock had already fallen to $54. Before the deal was even complete, the family had lost their first billion. Edgar Sr. reportedly asked his son, "What have you done?" But Edgar Jr. still believed in Messier's vision. He held the shares, convinced they would rebound. Instead, he was holding a collapsing paper empire. Chapter 4. The paper empire collapses. Throughout 2001, Messier kept spending. He threw lavish parties, bought a $17.5 million New York apartment with company money, traveled by private jet, lived like a man who had already won. Behind the scenes, Vivendi was drowning in debt. Over $30 billion borrowed to fund acquisitions. Revenue couldn't cover interest payments. The promised synergies between telecom, entertainment, and internet never materialized. March 2002, Vivendi announced a net loss of $13.8 billion, one of the largest corporate losses in European history. The stock collapsed from $77 to $54 to below $30 to below $20 to below $15. The Bronfman family watched in horror. Their $6.9 billion stake fell to $3 billion, then under $2 billion, then under $1 billion. Edgar Jr. tried to intervene. He urged Messier to cut costs, sell assets, restore profitability. Messier refused. He blamed the economy, 9/11, short sellers, the media. Then the truth surfaced. Hidden debts, accounting manipulation, bypassed internal controls. The US SEC opened an investigation. By July 2002, the board had seen enough. Jean-Marie Messier was forced to resign. In less than 2 years, he had destroyed tens of billions in shareholder value. For the Bronfmans, the damage was total. The fortune Samuel Bronfman built from nothing survived Prohibition, the Great Depression, World Wars, had officially fallen below $1 billion. Edgar Sr. later said, "I don't want to diminish the loss of money, but the real disaster was poor judgment. Not bad luck, not a market crash. Poor judgment. $6 billion gone." And Edgar Jr. would live with that reality forever. Chapter 5. Aftermath and Legal Reckoning. In the following years, the full scale of the disaster became clear. Vivendi was forced to sell assets to pay its debts. The entertainment empire Edgar Jr. dreamed of, NBC Universal, was sold to General Electric. Music divisions and telecom assets were dismantled piece by piece. Legal consequences followed. The SEC sued Vivendi and Messier for misleading investors. Vivendi paid a $76 million fine, then the largest SEC penalty ever for a French company. In 2011, a French court found Messier guilty of misusing company funds and providing misleading information. He was fined €500,000 and banned from managing French companies for 3 years. Edgar Bronfman Jr. was also convicted of insider trading for selling Vivendi shares while knowing the company's true financial condition. He was fined €5 million. His reputation collapsed. His relationship with his father never fully recovered. Inside the family, anger and loss lingered. He attempted a comeback. In 2004, he led a group that bought Warner Music Group for $2.6 billion. He later sold it at a profit, proving he did have business skill. But nothing could undo Seagram and Vivendi. Nothing could bring back the lost $6 billion. Once a name synonymous with multi-generational business genius, Bronfman had become linked to one of the greatest family business disasters in modern history. Messier faded from public life. He wrote a book defending himself, occasionally insisting history would vindicate him. It never did. The Vivendi-Seagram collapse became a case study in business schools worldwide, a lesson in ego-driven leadership, reckless acquisitions, and the dangers of stock-based deals without solid financial discipline. Chapter 6. Lessons We Cannot Ignore. The step-by-step destruction of the Bronfman fortune offers critical lessons for anyone who manages money or builds a business. First, if you can take cash, never accept only stock. Cash gives control. Stock ties your fate to others. Second, beware ego in decision-making. Both Edgar Jr. and Messier were driven by pride more than prudence. Third, boring investments often outperform exciting ones. The DuPont stake was stable and profitable. Hollywood was volatile and risky. Fourth, watch for red flags: excessive debt, a CEO with a messiah complex, aggressive acquisitions without integration plans, falling stock prices while leadership insists everything is fine. Fifth, diversification protects against catastrophe. The Bronfmans placed all their wealth in one fragile basket, and it broke. Finally, building a legacy takes decades. Destroying it can take 2 years. Samuel Bronfman built Seagram from nothing. Edgar Sr. protected it for a lifetime. Edgar Jr. lost most of it in a moment of ambition. $6 billion. 3 generations of effort gone. So here's the final question. Do you realize that the wealth you hold today, no matter how big or small, can disappear tomorrow with a single decision?